Good morning, student. Today is 1st June 2020 and this is my lecture number 46. I am going to continue the chapter Dissolution of Partnership Firm. In my previous video, I have given a lecture on theory and I have also solved numerical problem, practical problem, but I am again solving practical problem because practice makes man perfect. So you have to do the practice also, all the example and question of book. So see the question first, then I will solve it. Student, see the question. A and B are partners in a firm sharing profit and losses in the ratio of 3:2. On 31st March 2019, their balance sheet stood as under: in liabilities as account payable, reserve, investment fluctuation fund, age loan and age capital account are given. In asset side, bank balance, sundry debtor, less provision for doubtful debt, investment, stock, furniture, equipment and beach capital are also given. Now question says they decided to dissolve the firm on the following terms. Accounts payable agreed to take investment and furniture for 26,000. The remaining account payable agreed to settle their account at a discount of 5%. A agreed to take 18,200 in full settlement of his loan. Other assets realized. Debtor were all good. It means debtor realized with full amount. Stock at a discount of 20% and equipment at a discount of 5%. A customer whose account was considered bad in the past agreed to pay 1,000 and later be paid it. He paid it. A bill receivable for 5,000 was discounted and later dishonored, and recorded assets realized 10,000. Realization expenses amounted to 1,000 are paid by A personally, but of firm's account. A personally out of firm's account, you are required to close the books of the firm by preparing realization account, partner's capital account, and bank account. Now we have to solve this question. For this solution, first I have to prepare format of this question. So see the format. Now student, I have prepared the format of realization account. Realization account, DR side and CR side. Now I will transfer all the items related to realization account in debit side and credit side. So question says in liability side there are account payable 40,000 are given. So I will transfer by account payable 40,000. Now reserve investment fluctuation fund, age loan and age capital accounts are given, and in debit side in asset side beach capital account given. So I will put one by one in all the account where it will posted. So second thing, investment fluctuation fund is also given in liability side, so it will transfer into credit side of realization account, and we have not to pay the investment fluctuation fund. Now partners capital accounts are also given. So this is a format of age loan account, debit side and credit side, and this is a format of partners capital account. There are two partners, A and B. This is debit side, particulars A and B in credit side, and this is cash account, or we can say bank account also. It have also two side, debit side and credit side. Now first I will transfer by balance BD. Age capital is given in question 80,000. Partners capital, age capital is given 80,000. So I will post 80,000 in age capital account, and in debit side I will also post to balance BD for beach capital because it is given in asset side. So this is given 10,000. Now reserve is also given in liability side, so I will distribute reserve reserve balance 10,000 is given in question and partners distributed it in the ratio of 3:2. So it will be 6,000 and 4,000 respectively. Now next thing is age loan also given in liability side, so I will also transfer by balance BD in age loan account. It is given 20,000. Now I am going to in asset side. In asset side, cash, sundry debtor, investment, stock, furniture and equipment are given. I have already transferred Beach capital account in their capital account, so I will put all the item in realization account and cash account also. So see, first I have balance at bank, so it will transfer into debit side by balance to balance BD. Amount is given 7,000, so 7,000 I will put to balance BD. Now in realization account I will put the amount of debtor to debtor. 30,000 is given. Now second thing is investment. Amount is given 20,000. Now next thing is stock. Amount is given 30,000. Now furniture. Amount is 10,000. Equipment and amount is 50,000. In debtor, it is also provision for doubtful debt, so I will transfer in credit side of realization account provision for doubtful debt. 2,000 is given. Now I have transferred all the things related to balance sheet either in liability side and in asset side. So now I will see the adjustment given under the balance sheet one by one, and I will put all the amount. Now question says account payable agreed to take investment and furniture for 26,000. Now asset realized by bank account. It is debtor or all good, so it is 30,000. Now stock 27,000. Equipment 47,500. Bad debt recovered is also given because one debtor have bad but he paid later 1,000. Now unrecorded assets also given. Unrecorded assets 10,000 also given. So total cash realized 1,15,500 And now in liability side, in debit side of realization account, I have to pay account payable, so it will comes under bank account. Account payable will be 40,000 minus 26,000, so it will be creditor will be 14,000 only, and less 5% 700, so it will be now 13,300. And bill receivable dishonor, to bill receivable dishonor is also given 5,000, we have to pay it, so total will be 18,300. Now a student question says, A agreed to take 18,200 in full settlement of his loan account. His loan and age loan is given 20,000, and A agreed to take 18,200 in full settlement of his loan. So 1,800 will be profit on realization, so it will also transfer into credit side of realization account. So this is the thing given in this question. So I will put the profit in credit side of realization account by age profit 1,800, and now nothing extra is given related to realization account, so I will calculate balance of realization account. Credit side is more than the debit side, so it will show the profit, and total of credit side will be 1,64,300. I will also write in debit side 1,64,300. Now I will transfer the profit on realization A and B. Total profit will be 6,000, and it will divided into 3 to 2, so it will be 3,600 and 2,400. Now I will transfer the profit in liability in capital account. Now this is loan account. I will paid the age loan, so I will write bank account 18,200 only, given in full settlement of 20,000, so remaining will transfer into realization account. So realization account will be 1,800, and total will be 20,000 in debit side and credit side both. Now And in partners capital account, I will transfer the profit on realization account 3,600 and 2,400. In debit side, in credit side, now bank account as expenses, because I have paid personally expenses 1,000, so it will write in only partners capital account. Now I will calculate the balance of realization account, partner capital account. In credit side of each capital account will be 89,600. 89,600. And in credit side, when I will balance it, debit side, bank account, we have to pay to A 88,600. And in B's, debit side is more than the credit side, so in debit side 10,000, and in credit side also I will write 10,000. And bank account means we have to bring cash rupees 3,600. Now I will put all the amount related to cash and bank account. To balance BD 7,000, and realization of assets, realization account, total asset realized 1,15,500, and B brings amount, so B's capital account is 3,600, and in credit side by realization account, liability paid total is 18,300, and age loan paid 18,200 in full settlement of his account, and by age expenses, age capital account 1,000 is also, and to age capital account you have to take 88,600. Now total in debit side it will be 1,26,100, and in credit side also 1,26,100. So this is the solution. I will meet you again in my new lecture. Thank you very much.